I'm Beth and Vincent. I'm the managing partner of Open Velocity. We're a marketing strategy consultancy, and we're very interested in helping people working in complex industries, build better marketing strategies, go-to-market plans, refine their positioning. And I think it's fair to say there's nothing more complex than agency marketing. And today we're joined by Simon and Miles from Milestone Advisory. So they do M&A, growth, fundraising, and they've helped numerous agencies in that space. And I'll let them do a little bit more of an intro about themselves. But this session is really about how can agencies set up for growth in 2023. We've had the pandemic, that was challenging. Now we've got economic headwinds, also challenging. And to throw, something else on top of that, we've also got the changes in the technology landscape and Google deciding they want to build a brand new search interface, for example. So the structure of this session is tight. We've got 4 questions, 30 minutes. We try and respect your time, end on time. It's also going to be available on demand for anyone who wants to catch up on bits later. But I want to start off with a bit of scene setting, I guess. And this is maybe a question for Simon to cover. So we're seeing a lot of changes in the marketing ecosystem around technology. We've also got cookieless future coming our way, and we've got these economic challenges. What can agencies be doing right now to adapt to this very volatile, uncertain market?
Good question. Hi, everyone. Good to meet you. So my name's Simon Latash. Yeah, I'll go straight in if that's okay. So yeah, I mean, isn't it interesting? So yeah, we've got a lot of economic headwinds at the moment. So you've got inflation, which is pushing up interest rates, which has a tremendous impact on PE. So, the most acquisitive sector struggling with debt, which has an impact. Obviously, there's an end to quantitative easing happened a couple of quarters ago, which is probably the biggest event of all. But then on top of that, you've got risk of recession, geopolitical risks. You had Silicon Valley Bank. And I think what we've seen is there's been a little bit of nervousness in the M&A space over the last couple of quarters. But as I will come on to, I think there is still a lot of tailwinds that we should all be aware of and should be quite excited about, really. So this is definitely nothing like 2008. The banks are open for business. They're well capitalized. They are still funding. PE has never been stronger. So there's probably more than, I think there's about 1.7 trillion of funds not yet deployed in the PE space. A lot of that comes into, marketing, tech, media, and UK PLC is very strong. So you just have to have a look at the results from, the apex predators, as I call them, the 7 global networks. 3 of them had record years in 2023, and Q1 results were very good as well in 22 they had record years, but in Q1 23 they were also very strong indeed. And so, I think that a lot of these things balance out the position. I think ad spend is forecast to grow. And I think there's 2 other things I would bring out. So Bethan, to your point about complexity, I think complexity is our friend. So the increased complex landscape tends to mean that brands need to spend more time with agencies. I qualified as a chartered accountant way back when, and I thought I went through quite a lot of pain to get there. Many exams, very technical. If I had my time again, I probably would do the same thing. I think being a CMO is incredibly difficult. There's changes happening all over the place. Cookieless world is obviously very important. Can't rely on third-party data anymore. So data strategy becomes even more critical. First-party data is the focus, where brands collect data from users on their own platforms, and we've seen a lot of M&A in that space. So data analytics is a very hot sector for a reason. AirGrid, so MIQ bought AirGrid to build out privacy-first audiences for their brands. Publicis have acquired heavily. They acquired Epsilon. The reason they bought that was so that they could manage first-party data for their clients. So there's a lot of opportunity in there as well. And yeah, I mean, I don't need to go any more into the complex landscape, but I think that's a trend in our favor. But also what I wanted to touch on, to agency founders, there's a huge growing cohort of buyers. So you've got apex predators at the top. You've got the challenger brands, of which there's about 60 we track. So that's like Brain Labs, Bounteous, Known, Crowd, etc. But there are over 60 of those. And also you've got a lot of strength from US buyers. So there's a lot of active marketing groups that are acquiring in the UK. Consultancies are still very active, and the large independents as well. So, I think in terms of enabling agencies to tackle the modern marketing challenge, that there is a lot of buyers out there that is driving activity in the market. And I think that's a great playground to be in. So I think that the industry is in growth despite some headwinds, and there is a strong demand, and always will be, I think, for good quality assets.
Yeah, that's very interesting. And I think from kind of our perspective as well, there's almost, you need to have a curiosity about these new technologies, and especially things like AI, and not be kind of fearful for them or about them, and about, especially in the content space, if you're a content agency, will AI replace writers? Well, no, actually, it gives your writers better leverage. And it's interesting, I'm seeing a lot more, in procurement teams and procurement processes, the procurement teams aren't asking, are you using AI because we don't want you to use it? They're asking, are you using AI because we want to know how that's speeding you up and making you more efficient? So there's a lot of really cool stuff happening. But I think that the challenges as well, as the market moves quickly, agencies have got to kind of catch up and adapt, and especially from a positioning and proposition point of view as well. Because almost, this is a growth sector still, and I completely agree with that view, but because there is more competition. So not only do you have to be looking at the technology landscape, but also it's the competitive landscape as well. And how are, your buyers, whether that's from an acquisition perspective or actually a brand perspective, how are they assessing you, understanding your capabilities, and how do you stand out from the pack? And I think that's really hard for buyers in both spaces to assess, unless you've got some proprietary IP. Like you're seeing a lot of agencies build their own products at the moment, which is really interesting again. And that's the technology has opened up that kind of route to do that. So I guess when we're thinking about agencies prioritizing investments in technology, and also their own kind of marketing and sales engine to feed themselves to grow, how do they stay ahead of the curve on that? And maybe that's one for you, Miles, to touch upon.
Sure. I just wanted to say, because obviously Simon and I are talking a lot about agencies. We both have run agencies before, so we're not just M&A people. Because I was the CEO of Digitas many years ago, and Simon was the CFO of LBI and went through various other roles. So we've got a bit of sort of background and sort of lessons and scars to draw upon with these conversations. But I'll start, I think, Bethan, with that, because it's a multi-complex problem, I think. But just a little story. So I've had a couple of businesses I've worked with over the years. One spent, I reckon, probably multi-millions, probably £3-4 million on developing this sort of piece of software tool that they were planning on, taking to market and selling separately from the agency and that sort of thing. And it ended up, they realized after a while they were competing with very well-funded Israeli startups, and it became a noose around the neck. They had a development team in-house burning through cash, and it ended up being a business intelligence tool in the end within the agency. So they didn't really see the value in that investment. And on the flip side, I worked with a performance marketing agency probably about, 5-6 years ago now, that spent 5K on a tool that they use for every single new business meeting, right? So, and that was, they spent 5K and it had a great return on investment. The return necessarily wasn't revenue immediately, but it was winning pitches and getting clients excited. So I think a lot of it is, and there's probably a few lessons and stories in that I've said, but I think a lot of it is around, the approach, really understanding, what are your objectives? Why are you investing in technology and tools? What outcome do you want from it? Is it driven by competition? Are you seeing other people who are getting ahead of you? What's the reason for doing it? I think you've got to figure that out first rather than just jumping in, because you need to know what you want to get out of it. I mean, developing a piece of software, however, big or small, or an investment into these technology, there's a certain amount of management distraction that comes from doing that. away potentially from the core business if you don't know what you're doing. And if you take it to the extreme of trying to develop a piece of software or tool yourselves, that's a very different business model, requires very different skill sets, different marketing, as you know, Bethan, as well. And you can end up running two businesses within one. So there's sort of a line of caution there. But it's can you develop something that's going to make you better processes, speed you up, create stickiness with clients, make you more efficient? If you look at tools and technology in a different way, and IP in a different way, then there are multi benefits to doing it outside of just creating something that you think you can sell or sell on. And it's not always immediately revenue generated. So it might be sticky with clients. It might speed a process up. My general philosophy with investment of this sort is humanize what can be humanized. Okay, so everything that's client front facing, people facing, make that as good as experience as possible, and then try and automate everything else if possible. So just try and see whether you can automate every part of your business to some extent that doesn't require huge amounts of people interaction. So that's, I guess, general philosophy. I think you mentioned earlier about embracing new technology, Beth, and I think that's really important. It doesn't have to be, AI is obviously flavor of the month, and blockchain, VR, AR. I think just keeping abreast of what's out there. I don't think you always need to jump in, but just keep thinking about, okay, what's the impact? What's coming down the line here? What's the impact on my business? What's the threats to my business? What's the opportunities to my business? And you said before I had a call the other week with a business that does localization, right? So language localization. They were almost apoplectic about what's coming up. My God, we're going to get replaced. And I mean, that could have been the same conversation years ago with Google Translate, right? But it's just about adaptation, I think, and just seeing where you can fit in and where you might be able to add the benefit. And I think, did you also mention marketing as well?
Yeah, an interesting kind of, sales and marketing.
Yeah, so I mean, what I see a lot, and I don't know if it's off piece or not, what I see a lot with that is that most businesses don't really have a marketing plan, right? That's the sort of common problem. Weak proposition, undefined positioning, ebbs and flows of marketing because of client work, no consistency, selling services and not addressing problems and needs that clients have. I mean, those are sort of the I think talk about staying ahead of the curve here. A lot of why I think marketing fails and why people fail to get in front of people is because the first jump is to hire a lead generation person, but there's nothing but they haven't sorted their positioning out, the go-to-market strategy, the messaging that's going to land with that particular audience, the channel that's going to be most effective for that audience, the refining of those messages. So I think for me, probably one of the biggest things that people leave on the table is sorting that out.
I completely agree. I mean, to be honest, hey, that's the kind of work we do. So of course I'm incentivized to say, definitely you should sort that out, but it is fundamental. And I think we call it scattergun marketing, where you've got lead generation on one side, it's not holistic and part of your overall marketing plan. You might be building a subscribed audience over here through webinars, events, whatever you're doing, and actually that's not fitting in with your lead generation, and also your customers don't know what you do. And I think this is the risk with technology propositions. So if you're building a tool, actually there's something to think about with is that tool, it might be valuable, but is that diluting our proposition, and do we need to warehouse it in a new brand? And all that needs to be thought about, because there's cost of doing that. You've got more surface area to service, but it actually might help make you make sense as a proposition. And also to the marketing automation piece as well, and using technology within your agency. Again, what we're seeing a lot is people are generating within their agency a lot of data, and that might be through lead gen, that might be through their own marketing subscribed audience activity. And again, they're not harnessing that, they're not nurturing, they're not actually building a marketing engine. So I think almost this kind of technology, marketing, sales thing kind of coalesces almost into an area, which is really interesting.
Yeah, no, I completely agree. It's I think there are plenty of automation tools out there that can help, obviously with marketing. But I think, you know, a lot of it, I think, comes back to, you know, what are you selling? You know, a lot of agencies are, you know, effectively saying, do you want the red or the green one, right? They're not actually, and I guess this comes with sort of marketing, the tech or the tool, the service you're developing. It's about addressing a need, and I think that's the most important thing that agencies sort of fail to address.
Yeah, and that's interesting, because that leads me on nicely to the next question, because, you know, you see a lot of agencies specializing in certain verticals or certain niches, and how important is that kind of specialization or even kind of diversification in the current landscape? And I guess what factors should agencies be considering if they're going, because that specialization allows them to have that tighter value delivery, value kind of exchange, or perception of value exchange. So if you're an agency sat here saying, like, actually we're thinking about niching down, what should you consider?
Yeah, that's a good question. I think also the realization, obviously, is a lot of businesses grow off the back of clients, and they end up doing more than they probably should, right, for them. So they diversify their services because there's growth there. Why would you turn it down? It's very normal, and it's commercial reality. I think, you know, there's, again, I'll tell you another story. I'm full of stories, but I had a client that was in the e-com space, and they had both what would then call Demandware, which obviously Salesforce now, Commerce Cloud, and Magento. They're running two stacks basically, and selling those two. It becomes very difficult to do both of those. You have to find different people, different tech, you know, tech people to sort of, you know, service it. It's a hiring issue. Lots of marketing because of different audiences. Lots of sales strategy because one is around like big licenses, the other is around, you know, sort of chasing salespeople around Europe. So their clarity came in switching just to Salesforce, and that had an enormous benefit for them because it was all streamlined, right? So marketing was streamlined. They knew who the customers were. It was easier to hire. You know, lots of benefit there to doing that. So that's, I guess, again, there's probably a few nuggets in there that we could pull out. I think from an M&A perspective, you know, I think probably 5 years ago, pre-pandemic, and certainly the case now, acquirers are looking at capability a lot more than they are just necessarily the business itself. They're acquiring capability, and sometimes that capability comes in sort of discrete packages, right? We need influencer, or we need data and insights, or we need social, or we need something like that. Buyers tend to plug the gaps that they have, and that can be either a business within a network, or, you know, a smaller challenger, or that sort of thing. They tend to be looking for something quite specific. So from an M&A perspective, for us as advisors, it's obviously easier for us to sell a business that knows exactly what it's doing, exactly what issue it addresses, what market it serves, and it's relatively pure in terms of its sort of its offer to the clients. I think the other play obviously is becoming much bigger, becoming more full service, becoming much more of a commercial, interesting vehicle for, say, private equity and other strategics to get hold of, because there's an arbitrage, obviously, of, you know, different companies and services within one company to leverage. So there's a couple of things there around, you know, sort of diversification and size. I think if you're going to say niche, then the benefits of that are, you know, deeper expertise, as I said, easy to attract people, marketing aligned. On the diversification side of things, it's, you know, you're able to adapt to client need easier. So things, you know, like the technology we talked about earlier, you know, being able to say, well, the client's now asking for something different. You know, do you address it, or do you say, actually, no, we're going to stick to our knitting? It's a really difficult conversation to have. You know, it's a case by case basis, but you've got to make that decision to either, you know, take that leap and see, okay, well, there's a commercial leap here. The issues come really where you don't know anything about the thing you're getting into. And I think for founders, that's quite an issue, because you're then employing someone who knows about it, you don't know about it, and that becomes a bit of a risk to the business. But you know, additional revenue streams, growth opportunities. Where it comes, I guess, tricky, Bethan, from your point of view, is does it then start diluting the proposition?
Yeah.
And the positioning of the business? I mean, obviously, you don't have to shout about everything that you do for clients. I know, you know, I know agencies who do pretty much full service for clients, but tell the market something very, very different. But yeah, it does have an impact on the marketing as well. I'm sure you can see that.
Yeah, definitely, because I think being everything to everyone is such a tricky place to be, because it's extremely replicable. And that full service thing, I think obviously there's benefits at scale of being able to do that. But again, I've sat client side, so I've been someone buying agency services. And when I get a full service agency that says, oh, we can do X, Y, and Z, so we can take care of your PPC, social, all your performance spend, I'm a bit like, can you? Because often I have found in the past, unless you're working with a very large agency, actually the caliber of delivery is very poor. So I think there is a perception, especially if you're an agency dealing with, marketing directors, CMOs at larger brands, they will have been around the block and they will have worked with crappy agencies. So it's not just that, it's diluting your proposition. It's also there's a connotation in market for your buyers looking at that and being like, no way can you be full service. There's no way you can do that well. Especially at the smaller, I'm talking about agencies around the kind of 20 to 60 person mark. I found even though they say they can do everything, they essentially can't. And I think also, I guess it's interesting as well, maybe this is going slightly off piece, but could be an interesting question. I think it's tempting at the moment when the market's a little bit slower, and you might be getting briefs as an agency across your desk that aren't your typical, classic wheelhouse. And it's tempting to say yes to stuff that's outside of that and dilute your proposition a little bit just to get some cash and revenue in the business. Do you have a view on whether that's a pragmatic approach, or actually, longer term, you should be thinking about maybe saying no to some of that stuff?
I mean, pragmatically, sometimes you can't because you need the revenue. I completely get that. I think if you can avoid it, I would, because I just think, try and find the clients and the prospects that have the problem you've got to solve. Because I think sometimes taking things on, trying to deliver things that aren't in your wheelhouse, you probably won't make much money on it. It'll become difficult to deliver. The team will lose morale. There's lots of downsides to doing it. So, it's a complex problem, but, if it's easy to do it. But just consider the impact of taking that on longer term, because it can be, I've seen plenty of examples where, people start taking on work they're not really set up to deliver. The processes don't really work that well. It's difficult to deliver. Margins go down. The team goes in a bit of a spiral. It's not always a good idea.
Yeah, and I think from my client side experience, there is this idea that as an agency, you want to come in, you want to land and expand, and propagate yourself throughout the account. But actually, if your delivery on certain areas is really poor, the client's going to notice that, and it's actually going to pee them off, to be honest. And you might end up losing the whole account, because when it comes up for review, it's holistically, this hasn't worked for us. Social's been great, PPC's been really bad. I've had a bad experience. It's not a talented team. So you can kind of shoot yourselves in the foot a little bit by doing that, in my experience. So just thinking about, I think there's a lot of businesses at the moment, and I really am, happy to hear that the doom and gloom surrounding the economic landscape, you're not reflecting that back to me. You're saying, acquisition's still happening. There's still appetite out there. And I think sometimes agency land, you can be stuck in your own kind of myopic view and news about the landscape. But I guess, do you have any advice for agency owners who have maybe got to that phase of growth or scale where they're considering an exit strategy, or actually they're pursuing being acquired or acquiring themselves, and how to navigate that at the moment?
Yeah, no, of course. So we're working with a lot of sell-side mandates at the moment in the market. The first thing to really understand is what the shareholders are looking for. So what is the clarity on outcome, and that can go two paths. It can be that we then need to go on a sort of growth advisory route, where we're looking to build that business up to the size that they want it to be ready for the sale, or we can go straight into a sale. And there's so many things to think about here that I probably would not do it justice in a few minutes. But it's about putting your best foot forward. So valuation is a product of two things. It's a product of LTM EBITDA, so your last 12 months, and it's a factor of a multiple, and that's pretty standard across the industry. So what we're looking to do is we're looking to help those agencies to drive EBITDA to the highest we can get it. And there's a whole load of activities to support that, but it's also then driving that multiple. And there's some very clear evidenced ways that a buyer assesses a business, and they will determine where they end in that range. So if a business is in a range of 8 to 10, there's certain things we can do to make sure that they're at the top of that range. What we actually did at Milestone is we've built out a tool. It's a 10 pillars of value creation that actually goes through that in tremendous detail. So, it covers things like profit and loss and balance sheet, but also proposition, sales and marketing, products and IP. There's a big section on, operational commercial excellence, corporate governance, often overlooked. But, it's really things like revenue quality is paramount. Revenue predictability, sustainability, the ability to deliver on that forecast. It's margin expandability. It's the ability to improve that margin post acquisition. If you can demonstrate that in the story, that's very valuable. It's management quality. It's management commitment. It's the differentiation. It's the proposition. There's a lot to cover, but also it's about the process. So really identifying, and this is where Miles and I spend an awful lot of time, is looking at the buyers we're talking to and working out where the biggest synergy is. Where can we place this agency to drive the highest amount of synergy? And a lot of the deal structures we see are still earnouts, and the key to a good earnout is kind of negotiating a strong ratchet so that you can claim some of the value of being part of a bigger mothership. And that's really exciting. That's you working together with the acquirer to, either, cost efficiencies, which tend not to be the focus, or really building out that revenue across their client base. But yeah, go on, Mark.
Just going to add to that, I think one of the other key things, certainly about timing and certainly relevant in this current market, is momentum. So, buyers are buying into the future growth. They're not looking necessarily always at the past. They're looking at, what's the opportunity for the business going forward? Does the business have momentum behind it? Is it moving? Is it going places? I think also to your point earlier, good businesses will always sell in any environment, as long as the mechanics and the things that Simon mentioned are in place. It's just when the market's not as good, and at the moment, the fact that Simon and I are probably the business we've ever been at the moment on the M&A side, it's just about momentum really, and making sure that you've got a really good plan going forward, and you know how to execute it.
Yeah, and the reason for that is that a lot of these acquirers are buying growth. So they're looking for businesses that are 10, 20% growth year on year, and that can really evidence that in a strong story. Sales docs are so important to demonstrate that. And that's what you want to be getting into, that position as you're going into a process.
I wonder if there are maybe some people sat here who I think maybe 12 months ago, their narrative would have been very strong. They would have all the things you're talking about. And actually, the last 12 months, when we come back to that last 12 months of EBITDA and looking at that they're wondering, do I hold off until the market recovers and our future looks a bit brighter, or is now the time to move? And I don't know if you have a view on that at all.
It comes back to the 3-year plan. So that if they've had a difficult trading quarter and LTM is down, then that's a real consideration, because that is going to impact the outcome. But there's ways around that. You can either go for a bigger earn out period, so that a higher proportion of the overall valuation is driven into the earn out period, or indeed you can postpone it a little bit. The best times to go to market are first 6 months of the year and then September. So it can be that you go in September, but also if you've got a really strong, compelling story, you don't have to rely on LTM EBITDA. We can talk about the next financial year, or this the three quarters within it, and also, you know, it's the multiple, you know. So if you feeling that EBITDA is a little bit down, but you can argue a stronger story, then you can address that in the multiple as well. So yeah, there are ways around it, but it is important to have that momentum going forward.
I think the other aspect is, you know, why are you selling, right? Is it because you need greater access to clients? You need more resources to achieve your growth plan? I think understanding, you know, what the reason for the M&A or the acquisition is hugely important, because that will then dictate the best strategy for you.
Yeah, that makes a lot of sense. I'm just conscious of time. I know we said we'd stop. Half an hour is our limit, so I think we'll cap off the conversation there. But if you do have any questions, obviously feel free to get in touch with either of us. We'll be doing a write-up of this event. The video will also be available on demand. And I just want to say thank you so much to Miles and Simon for joining. I was furiously making some notes there, things to go away and kind of think about. And thank you so much to everyone for coming. Really appreciate all of your time.
Thank you.
Thanks, Bethan.
Thank you.
Bye.